Hello traders, this is a recap video for DAX for the Tuesday, October the 9th, and I will also cover some of the thoughts and ideas for the next period. So today, heading into the open, DAX in pre-market session opened with the gap down into the cash close from yesterday, and this first opportunity to trade was shortly after the open, when market was testing cash close and attempt to go higher above this level here. It is an intraday level, so it wasn't there really before the open. I didn't plot this zone before the open, but after the market starts to balance here, then I have noticed the confluence here between this small bottom and this top, and that the market cannot go above that, and then I plot a zone. So maybe if you are aggressive trader and you realize that there can be some zone here good for trading, then you could go short right here, and later there was another opportunity to short the market when this move made a pullback again to the cash close. And you can see that DAX often test cash close multiple times during the day. It was hovering around it, it was tested here, then again here. So cash close can be really important level for day traders. So that was another opportunity to go short. As I said yesterday, I was expecting DAX to test 900 zone again and to bounce from there, but that didn't happen. It did it just go there and make a continuation move. I thought that there we can see some kind of bounce, and after that bounce that we could get a lower low, but that bounce didn't happen. I personally had a short from around here, from around cash close, but by mistake I closed it all here for just 20 points, and I have targets here, and another target was near 900. So you know, there is no crystal ball in trading, and as I said yesterday, that I expect to see a lower low, but how the DAX will make it, it is a question, it is $1 million question. So if I knew in advance that it will go pretty much directly to the 800, I would leave my trade, but that didn't happen. Anyways, that is the part of trading. Even if you're right, you can also, you know, bank much less than evidently was on the table later. So 900 didn't provide any bounce, and price just continue lower, and it just tested the 800 level, which is the top of this support, as I shown many times before. And this support dates from March. This is the first time. March, then this is March also, the end of March, and beginning of April. So it is past some time. After that we got a swift rejection from 800, and that was really the place to go long with your order already waiting there a bit above. Now this one is tricky for day traders, because as I said, as you can see here, this area is quite wide for day traders. I mean, it is 100 points wide. So if you want to front run this zone to get a feel for, let's say, swing trade, then you must hold your buy order here with a stop behind invalidation point, and invalidation point is 700, meaning that your stop must be 100 plus points. And if your stop is 100 plus points, then you should expect at least 200 points to get from it, right? And that is what happened. From 11,800 price was went up to 12,000. So we did get a 200 points move. But you can catch this. You see, this is a 5-minute chart. You see that only one 5-minute candle just touches this level. So if you don't have an order in advance waiting a bit in front of the zone, then you wouldn't get a good feel. Then you would have to chase it with your stop below this, not knowing if the price maybe will push another time and maybe makes a lower low just to, you know, stop you out from the trade. So this is basically what happens today. One aggressive possibility for aggressive short, then this is more easier trade to take. When you see this level is holding the prices, it doesn't have the ability to go higher. It goes below cash close, retested, then you go short. And then maybe to wait with your huge stop, your swing stop for swing traders here above 800. So that is what happened today. As we can see on larger time frames, basically all of the action here in these 100 points below 900, from 900 to 800, is a one big wick on a 4-hour candle. A rejection. In daily chart it looks like a doji, like a rejection. So there wouldn't be much surprise that we get some kind of continuation move to the upside for tomorrow. And then it also wouldn't be surprising to see that price moves again to this area. It would be useful to, you know, draw Fibonacci retracement and to see if any of these levels, Fib levels, are in confluence with the zones. And it is. Look at this. This halfback is around 12,130. This is in between this prior zone, then 12,050, and you can see on the zones. Here it is. You have a zone here. So this zone is going to be important for tomorrow. Back to the daily chart. As you can see, these major areas are usually tested a few times. It is, you know, these areas you cannot really expect the price just to touch it one day. It makes a doji and then just woof, goes higher into the sky. Here you have one touch, 2, 3, 4 times. 4 times. This was tested 4 times. Now this 1, 2, 3, 3 times, 2 times. Look at this area. How many touches? Plenty of touches. Here we have a double bottom also with a spring. This is usual for DAX. So it wouldn't be anything you know, unusual that we can see something like this. The price go to any of these Fib retracements, which are also, as you can see, in confluence with zones, and then test this area yet again to make some kind of, you know, double bottom. So there could be another test. We shall see. But for tomorrow, the most important zones are going to be this 800 and this around here. And tomorrow morning I will post an updated chart with the zones, and you can also follow me on Twitter when I post charts and plenty of my trades live. And this is all for this video. I wish you good luck and good trading.